Good evening to one and all, and welcome to the second episode of Decrypting Mojo Dots. We have our product manager Jason D'Souza, who would be providing insights on the quality parameter of a stock. Towards the end, we would also be having a Q&A session. Over to you, Jason.
A very warm welcome to all investors present here today. As Mehta rightly pointed out, this is our second episode of Decrypting the Dots. If most of you all remember, I had previously done an event on how to decrypt the CFT score of a stock. And in today's event, I'll be talking about the quality parameter. And I don't know if most of the investors actually know about this, but quality is one of the most important parameters when it comes to stock picking at MarketsMojo. Whenever we recommend a Mojo stock, the quality should at least be good or excellent. So let's dive straight into the event today, and I'll be taking you across how we use Quality Dot and how you could use it to enhance your research while using MarketsMojo. Starting off with this disclaimer that investment in securities is subject to market risk. Past performance should not be construed as a guarantee for future returns. Let's start. Quality is subjective. Now I'm making this particular statement over here. And I'll give you an example as well. If I have a particular product, or let's say I have a particular loaf of bread, and I provide it to any of the investors present here today in today's webinar. Now, one of the investor might actually like that loaf of bread, and some of the investor might have a different preference. He might say the quality of that bread is not good, I like multi-grain bread, so on and so forth. The point I'm trying to make here is quality is subjective when it comes to humans' decision making. What you might find of excellent quality might be of poor quality for another consumer. We here at MarketsMojo is trying to break this thing. We are trying to say that quality is not necessarily subjective, it's objective in nature. Now, as soon as you remove this subjectivity and add some objectiveness into your analysis, you're getting rid of a lot of human emotions, and you're also giving a data-driven approach to your stock picking strategy. Okay, so here at MarketsMojo, we are not speaking about quality being subjective. We are talking about how objective it can be. What are the different quantitative factors we can look at? What are these factors? I'll take you all in the next slide. So how do we determine a stock's quality? So our method considers factors such as growth, efficiency, and capital structure on a multiple long-term data point across business and management quality. Now again, a little high fun words and stuff. But let me break it down for you today. Let me go in depth and show you how we break down quality into three different factors. We look at the growth of a company. We look at the sales growth, the operating profit growth, and as well as the profit growth of the company. That's the first factor we look when it comes to quality of a stock. The second factor is the capital structure. We look at ratios like debt to equity, debt to EBITDA, interest coverage, sales to capital employed. And the third and the final one is management quality, where we look at a number of ratios and other parameters as well. Now you can see all these figures on your screen, and it might sound a bit confusing for you, especially if you're not from a finance or an accounts background. So what I'll do is I'll take a look across each of these dots, and I'll also try to explain it in a layman way. So how you can actually understand when it comes to growth, what it exactly means. So growth, as I said, we look at the 5-year trend, and very simple, we look at the sales and the operating profit. We look at the growth within these two parameters. And the reason for this is that within sales, we are looking at, is the company actually growing? Okay, all the activities the company does, whether it's marketing or whatever, is the company actually pushing up its top line? Is the company growing and expanding? Okay, so that's how we capture it when it comes to sales. And then we look at the operating profit, because we want to know if it's growing efficiently. Operating profit considers all the important expenses of a company and ignores some of them which are not required. So we're looking at not only if the company is growing, we're also looking if it's growing efficiently, and we are looking at a 5-year trend. Okay, so we're not only looking at growth of one quarter on quarter. If a particular company does excellent sales in just one quarter, it does not actually affect the quality of a company. We're looking at a long-term trend of at least 5 years over here. Okay. Moving to the next one, capital structure. Again, some confusing ratios on the left side, but I'll be explaining it to you on the right side what it exactly means. Debt to equity, debt to EBITDA, interest coverage, and sales to capital employed. These are some of the ratios we look at when it comes to capital structure of a company. In debt to equity and debt to EBITDA, we're actually looking at how much leverage or how much is the company actually borrowing. Okay, we are looking at those two ratios to understand कि कितना loan और कितना long-term borrowings है वो company का at present. Interest coverage, we are looking at how easily can the company pay back its debt. So even if you have some debt in your company, how easily can you pay it back today? And lastly, sales to capital employed, it again looks at efficiency in generating revenue from the net assets at its disposal. Okay, so you don't have to dive deep into what are these ratios, but I'm just trying to explain it to you on the right side of the presentation. Then the next part, which is management risk. Okay, return on capital employed, return on equity, operating cash flow to profits, some of the ratios, tax ratio, dividend payout. Explaining you what it exactly means is that we are looking at how effectively is the company utilizing its funds that's been given by shareholders, and are the operating profits generated internally. We're also looking at tax ratio and dividend payout ratio over here, and I spoke to my team and I realized that the reason we are looking at dividend payout ratio as well is because we want to know that the profit the company generates, is it actually giving it to the shareholders? Is it profit which is actual in nature? It's not just profit on paper. Is it actual profit? So if a company is making loss or the company's profit is not actually proper in nature, then it won't actually give out dividends. So we're also looking at dividend payout ratio, and the same way we're looking at tax ratio. Moving on to the next two parts, which is related party transactions and pledged shares. I don't know if you all understand the concept of related party transactions, but it happens when there are, let's say, group companies actually transacting with each other. Let's take, for example, Tata Motors and Tata Steel. Now, Tata Motors might be procuring some raw material from Tata Steel, and they can actually get it at a favorable price, unlike what price is prevailing at the market. Similarly, even Tata Steel can actually, give out, some of the steel to Tata Motors, for example, at a little higher price. So there can be some gray area when it comes to group companies. So we look at related party transactions for the same reason, and we see that it's not a very high proportion when it comes to its overall sales. Lastly, pledged shares, a very controversial topic. A lot of investors actually, speak about, a particular company having pledged shares. Why are we recommending it? So here we just look at whether the promoter has pledged a substantial amount of its shares, okay, for any of the fund requirement purposes for the promoter. Now you already need to understand that pledged shares isn't just one of the factors we look at. It's just one of the factors we look at. It's not the only factor. So if any time tomorrow you all see these ratios and they're not actually, doing well, you all don't come back to us and say, you know what, pledged shares high company ka fir bhi recommend kyun kiya? Because it's just one of the factors we're looking at. Lastly, institutional holding. If you all know, most of the big institutions like domestic and foreign institutional investors, they have a lot of research, a very big team when it comes to analyzing each stock on the exchanges. The fact that they are actually investing in a particular company, especially small cap companies, reinforces our research. It gives us some confidence when we go to pick companies, because these companies have already been researched by people on ground level, that too manually. Okay, so this is the third part where we look at management risk. And as I said, the left side contains the ratios, the right side contains the actual meaning when it comes to these ratios. Now moving to the next part, I want to actually show you all where quality fits in when it comes to the 4 dots. As you all know, we use quality to calculate the Mojo score of a company. Out of 0 to 100, we rate a stock from buy, strong buy, hold, sell, strong sell. And quality is an important parameter which goes into determining the stock score you all can see on top over here. Okay. Now, if you all know, I already covered financial trend last time, so it's marked in gray, and today we are covering quality. Okay. And I'll also speak about how we can cover the next 2 parameters going forward. And just to give you a small insight, quality and valuation, as the slide says previously, it's a long-term consistency parameters. Whereas when it comes to financial trend and technicals, it's more of the momentum parameters for near term. So in this particular slide, I just want to show you all where quality exactly stands when it comes to stock picking. Okay. And basis these 4 parameters, we then pick a particular stock. So I'm giving you a disclaimer over here. I might show you a lot of things about quality today, a lot of trends, analysis, so on and so forth. But remember, when it comes to picking a stock, don't just only use quality in your stock picking process. Use it to supplement your research, not to reach to a final decision when it comes to actually buying a stock. Moving on, how does quality exactly get calculated? What happens? So we collect data from our providers. As I showed you all in the previous slides, there are a lot of different complex ratios as well. Okay, so we collect this data from our data providers. After we collect this data, we don't simply push it in the system. We run some checks and balances. We try to see whether the sales is not exorbitantly very high this time, or if the profit has not grown extremely high this time. We look at these particular things. We have some manual checks as well to ensure that the data which comes in our system is clean. It's not just numbers which is coming in. We try to keep some checks and balances so that the final quality should not be calculated on some wrong data. Otherwise, the quality doesn't make sense over here. So we have checks and balances over here. And then we finally analyze the data, which is completely system driven. As I said, there's no particular human sitting over there and saying, okay, Reliance ka quality excellent karo, Yes Bank ka quality below average karo, nothing like that. The system analyzes the data, and finally we have this grade of quality. Now, if you see the text below, it says quality grade sale, and that's below average, which is a red dot, yellow dot, which is average, good, which is currently highlighted, and finally the best dot you can get for a stock is the excellent parameter over here. Okay, so this is how the quality enters the system, gets checked, gets analyzed, and finally we throw a grade, which is on 4 different levels: below average, average, good, and excellent. Okay, in that particular descending or ascending order. So I'll need to know these grades today before I move on to the next particular slide to explain you the different analysis. Okay, moving on. Where does quality exactly fit in stock picking? Now we made a particular grade called quality, and a very important dot. But where does it fit? What's quality's role in our stock picking analysis? And now I'm making a particular statement over here. I want you to listen to it. Quality might not pick all the winners, but the stocks it selects would have greater proportion of winners and fewer losers. You'll need to understand it's a very important gatekeeper over here. There might be a lot of stocks trading currently on exchanges, around 4,000 to 5,000 stocks. Quality might not pick all the winners, but the stocks which gets filtered from quality as good and excellent, there'll be more winners and fewer losers. So there can be stocks which are potentially turnaround companies with a below average quality grade, and it might actually itch you to invest in these companies because they might have a turnaround story. But we don't compromise on stock selection. We select good quality and excellent quality stocks when it comes to picking Mojo stocks in our analysis. Okay, so I might just repeat this line. We don't pick all the winners, but the stocks it selects would have greater proportion of winners and fewer losers. That's what increases our success rate. Okay, so a very strong selection strategy when it comes to quality of a stock. This next particular concept of where does quality fit in stock picking is that quality is not judgmental. Now I'm making this particular statement over here because as a human being, if I tell you about any particular company, let's say I speak about Yes Bank today, and because of all the episodes which has happened with Yes Bank over the past 3 to 4 years, if I ask you to invest in Yes Bank today, you might have some bias, some recency data or some memory in your head that this particular company, it's not done well in the past, it had problems. So you would actually judge when it comes to human beings analyzing stocks, we actually judge a lot. But quality is not judgmental over here. If it makes a particular statement, it will relearn again. Okay? What I meant by this is that there can be below average and average companies that improve to become good and excellent without any bias. You might have not performed well as a stock before, that's fine. We will analyze your recent trend and then slightly push you into good and excellent group as well. Okay. Now what I mean by this, I'll show you some particular data on how we identify these turnaround players. I'll give you the name of few stocks which were below average and average previously, and they improved to become good and excellent. So it's not judgmental over here. If the company is improving, then we will pick it as a Mojo stock going forward. Let me show you the list of stocks. So there are around 46 Mojo stocks I found out. In the last 3 years, they were around below average to average. So, below average and average companies don't qualify into Mojo stocks. But that parameter particularly improved. And we could pick a lot of multi-baggers, I would say, from this particular list. You all might not know, Loris Labs was previously an average or a below average company. It then entered our system around 2019. It turned into a good company, and we recommended it. Not judgmental. The past performance might not be good, but if it improves, yes, we might recommend it as a Mojo stock as well. Similarly, Rajratan Global, Dollar Industries, GHCL, First Source, JK Lakshmi, NIT, Dwarike Sugar. These stocks have done extremely well, and they were previously a below average or an average quality stock. But since it's improved its quality to good or excellent, we have recommended them. So these are some potential turnaround stories. Now, this is one important thing and an important learning I want to take you all today. If you all remember my previous event when I had done the CFT score webinar, I spoke about the improvement in the CFT score is something you'll need to look at. So I went back and I checked the same thing with quality. Does change in quality, when I say change, I mean does changing the grade, let's say from below average to good to excellent, or the other way around, excellent, good, average to below average. Does that change have any impact on the price movement? And I've got some data to show you over here. So what happens when the quality of a stock improves or deteriorates? So we will review the quality of the stock at the start of the period and at the end of the period. Let's look at the quality of a stock 3 years ago and what's the quality of the stock today. Has it improved? And if it has improved, what has been the performance? If it has reduced, what has been the performance? So I'm showing you some data. These are companies that have improved the quality on a 3-year timeline. So 3 years back, they had a particular quality. Today, that quality has improved. So we had some 264 companies oddly in our system that have improved their quality dot. And this is the breakup of the returns of these companies. Okay, they have improved their quality dot. And if you all see, there are around 74 companies or 28% from this list which have given above 400% return in the last 3 years. Around 36 companies which have given around 200 to 300% returns. And what I want to highlight here is that we are picking mostly winners over here and we are getting rid of all the losers. There's only one company which has improved quality but gone down by around 56%. Okay, and that's hardly any proportion of the company. So the point I'm trying to make here is 68% of companies have moved above 100% after improving their quality. Really good breakthrough result. Really shocking result. 68% of companies, not positive return, have moved above 100% returns since they've improved their quality in the last 3 years. So I need to understand the importance of how quality can have as the stock improves its grading. And another positive is that only 6% of companies have given negative returns from this list. So if you only looked at how the quality of a company improves, this is the breakup. Only 6% of companies have given negative returns if they improved their quality, whereas 68% of companies have given above 100% returns. Really multi-bag of stocks. Now 3-year period, I agree that COVID was there, 2020 to 2023. So I also looked at a 1-year period over. So companies that have improved their quality on a 1-year period. So there are some 256 companies like this. Now here again, as you see, last 1 year, it was really a choppy market. Many of the small and mid caps did not do well as well. But here, if you still see, 23% of companies have moved above 50%. Okay, in the last 1 year period I'm talking about. Improved their quality dot in the last 1 year period and moved above 50%. Really shocking results. Okay. Now let's look at the other side of the coin, companies that have reduced their quality in the last 1 year. So I did not have 3-year data for this. I'll try to ask my team for that. But I could look at the last 1 year, what has happened for companies that have reduced their quality. So 170 companies in the list, and look at the number of companies giving negative returns over here. The quality has deteriorated and around 67% of companies have given negative returns. Okay, and this is just a 1 year period, but still, if the company has deteriorated its quality dot, it has 67% chance of it giving negative returns from the list. And you can see hardly any companies that have improved the quality have gone up substantially. There's only one outlier over here, 6 companies over here, so on and so forth. The point I'm trying to make over here, that does the change in quality impact price movement? Again, quality might not pick all the winners. As I showed you over here, the quality reduced. It did not pick a few winners over here. That's fine. Quality might not pick all the winners, but the stocks it selects would have a greater proportion of winners and fewer losers. As I showed you in the last slide, only 6% of the companies that improved quality were actually negative. So this is the one statement I want you all to learn from this particular event. You all might not understand most of the ratios, but you all need to understand quality is our gatekeeper. There might be few companies that do extremely well with below average. That's fine. We are not here to chase all the winners. But the stocks we invest in should have higher proportion of winners and fewer losers. Okay, now I'll talk about some other important factors when it comes to quality dot. Okay, some other important factors which most of the investors don't know about. So we have a particular limit when it comes to actually, rating a dot as rating the quality parameter of a dot. We look at the market cap limit. It should at least be above 100 crores. So I got a lot of feedbacks previously that, why are you not rating the quality of this stock? Why you need rating the quality of that stock? So if the market cap is actually below 100 crores, it does not make sense at all. Even the sales limit should at least be above 50 crores when it comes to rating the quality of a stock. Now, due to this, there might be thousands of companies which don't get rated, but that's fine. As I said, we might not pick all winners, but if the market cap limit and sales limit is not above 150 each, the quality of that stock won't be calculated. We also look at mutual fund institutional investment when it comes to the change of the quality of a dot. Now, as I said, mutual fund investors have a really big team and they do a lot of on-ground research. So the mutual fund institutional shareholding should be at least above some certain percent when it comes to actually putting a dot, improving the quality dot of a particular stock. Now, another case which I had found out is that quality dot is like a gatekeeper and it has zero tolerance to corporate governance issues. If a particular company, hear me out, if a particular company has a corporate governance issue and there's any particular scam or any particular fraud happening, any particular cheating happening within the company, we suspend the quality dots. We don't take any second chance. This is our manual intervention to save our investors. If any particular company, I'll give you an example over here. I just picked it up. With the most recent example, so I'm giving it to you. Lux Industries. This was our stock of the month. When we recommended it, it actually went a bit top and then it started moving downwards. And this particular price you all can see here is since the date we suspended the quality dots. The reason for that, there was some problem with the promoters and the management. There was some insider trading news as well. But this is the time when we actually said, you know what, guys, we are suspending the quality dot of the company, exit this stock. We got a major backlash, you know why? Because after suspending the quality dot, the company actually moved up. If you see this green peak over here, it went up to 3058. And a lot of investors said, you know what, guys, you're not researching properly. Why would you all actually suspend the quality of this stock? Okay, it's moving upwards now. Why would you exit as stock of the month? And then you can see the movement from here. Zero tolerance to quality, to any corporate governance issue. The stock is down minus 43%. It was a stock of the month. Then we exited it. Okay, and we exited at a slight loss of 10%. So here is where we act as a gatekeeper in quality. And there's a zero bias if it comes. Yeah, there's a zero bias when it comes to actually if any particular company has any corporate governance issue. Okay, so Lux Industries was one of the examples. We also had India Bulls Housing and we also had, I think Future Group companies as well, where we suspended the quality dots directly. Okay, just a second. Yeah. So I'll move to the next particular slide. Let's go to MarketsMojo right now. Let's look at the quality dot of each stock and also let's create a particular screen to actually see how we can use quality inside our own research as well. I must have, actually spoken around 10 to 15 minutes on what quality is, but it really matters if you can actually go on site and understand how to use quality as a dot. Okay. So moving on to the website over here, what I'll do is I'll simply search any particular stock name for now. Let's say TCS, for example. And as soon as you search this particular stock, you can simply click this third option over here, which is quality. And if you see the quality of this stock is graded as excellent, which is the highest parameter over here. And the three factors which I spoke about are also in green. Now these should not be yellow and red. They can be yellow, but if they are red, it's a slight problem in that company, in that particular company. The management risk is good, growth is good, capital structure is good. Now, what are the ratios over here? You can simply come on this particular slide over here and find out the key factors. I've showed you all this in my PPT, the sales growth 5 years, tax ratio, dividend payout ratio, so on and so forth. Okay, so here is where you can actually understand how to read the dot of a quality. It's not that complex. We've kept it very simple over here. We don't want to actually, overwhelm you with a lot of information. So you get the grade of the company whenever you reach the stock page and the three different factors that have been analyzed: management risk, growth, and capital structure. So as I showed you, this is the quality dot and these are the key factors. Now comparing stocks with peers, it's very important that you might actually find a particular stock. But as soon as you compare it with peers, you get an idea on the ground level reality. Let's say you open a particular sector. You go to chemical sector and you find a good quality stock and you're like, you know what, the stock is quality. Jason said the dot should be green, so I'm fine, I can continue my research. But always compare with peers to get some idea on what's happening when it comes to competition. So you can also compare the quality of TCS with other companies as well. Moving to the side just to show it to you. If you click over here, you can see that 187 IT software companies for which the quality has been calculated. TCS is excellent, Infosys excellent, HCL Tech excellent, Wipro is good, so slightly below. Simply sort it down to get all the good companies first, then let's say excellent companies next. Some other companies which does not qualify. Okay, and then below average companies. Okay, then we have average companies over here. Okay, you can see Mastech over here, it's currently average. It was good previously, it's turned to being average. As I said, quality is not judgmental. A particular company's performance can change over a period of time and the quality will change as well. But if you ask any other Mojo investor about investing in Mastech, he might be really happy because the stock has given good returns. So zero bias over here. Again, Tanla platforms, average quality, so on and so forth. So comparing with peers is quite interesting. It gives you some perspective of the quality within that industry as well. Okay, so we're done with understanding the quality dot and comparing it with peers. We have also kept these three quality parameters I spoke about: growth, capital structure, and management quality in the screener as well. So that's when if you want to play around and actually, find any particular company, going deep dive and actually playing with some of the filters and then shortlisting company. Let me take you to the screener section and actually show how you can do this. So moving to the website again, you can simply go to research and make your own screener. Okay, I'll clear all filters for now to start off from scratch. First dot itself, quality grades. Here you can select any of the grades over here. So let's say excellent, good, so on and so forth, average, below average, okay? So you can see 2 to 5, 6 companies have actually been calculated and this is the particular grades over here. Then you can actually, let me actually remove below average and average for now just to show you excellent and good companies. Then as I said, growth factor, first factor of quality, capital structure and management quality. Within growth, you can also play around and see the different factors inside quality. Great, so let me just run this list for now. You can see these are all the good and excellent companies, 446 good and excellent companies in MarketsMojo. Ujjivan Small, JK Paper, Cochin Minerals, Maruti Suzuki, Bharat Dynamics, Federal Bank, a lot of companies over here. And then you can actually put in your own filters inside these to actually, shortlist even further. So these are good companies and excellent 446. Let me play around. Let me go to sales growth 5-year average and operating profit growth 5-year average. And here I will see that the company should at least grow at 20% CAGR. And with EBIT, let me say 10% for now. Okay, so now you can see from 446, we are down to 82. Let's go actually even deeper, 30% EBIT, 45 stocks. Okay, so here you're using excellent and good quality companies, but you're also, actually looking at companies that have increased their sales at a very fast rate. There are other factors you can add as well. Let's say capital structure, or actually let's look at management quality over here. Okay, and there are different factors you can apply. Let's look at return on capital employed. And let's keep this at, let's say 15. Again, 44 stocks. So let's increase it. Let's keep it at 30. 19 stocks. Now you can run the analysis and get the list of stocks over here. Now, if you can see, there are many micro cap companies as well. And I can see one large cap, Tube Investment, for example. Sales growth 24%, EBIT growth 42%, ROC 45%. You can also add the return to see how the companies have done. So let me add the 5-year return, the 3-year return, and let's say the 3-month return. And let's run the analysis. Okay, here you can see the returns. 820% return by Tube Investments in the last 5 years, 430% in the last 3 years. Okay, then we have RHI, Magnesita, All Cargo Logistics, so on and so forth. So you can actually see how these companies have performed. Now, I don't know if you'll know this particular company, Best Agro Life. It's a small cap today, but it's given some 26,000% returns in the last 5-yearly period. It's a very high number. And if you actually visit that stock, you can see it's a Mojo stock currently, and the quality is good. Okay, it has some problems with capital structure. That's why it's highlighted here in yellow. The rest 2 factors are currently, you can see, green over here. Okay, so this is how you can actually use quality as a parameter in your own research. Go within the factors of quality, which is growth, capital structure, and management quality, to actually then reshuffle or realign your analysis further. You can also see let's say, I can do another study over here. Let's look at the quality, excellent quality companies only. So I'm going to select excellent quality companies over here. And let's look at what industries fall in the excellent quality companies. So I'll click on industry and I'll run the analysis. So here we're getting all the excellent quality companies. I'll sort it by industry. Okay, so you can see bearings, casting, there are 4 chemical stocks I can see. Only 1 cigarette and tobacco stocks, 3 FMCG stocks. I can see a lot of IT software stocks. Okay, I think the list is dominated by IT software stocks, and you also have to realize that these stocks have done well over the long term. They've actually done well. Some of these companies have really done well, like Tata Elxsi, Sonata Software, so on and so forth. And then you can see there are also 3 pharma companies, 4 private banking companies, so on and so forth. There's one more company here. Okay, so here you can actually add from different industries, look at the different index and see the quality grades for those companies as well. Okay, so now moving forward, decrypting the dots series. What we've done is that we've spoken about the quality parameter and we've spoken about the current financial trend. Next up, I'll be looking at the valuation lot. I'll deep dive into the valuation lot, see how you can use the valuation parameter when it comes to analysis. And then we'll also look at technical trend as well. So somewhere around next week, I'll do decrypting the valuation lot. And I promise you, after these 4 different webinars, it's like a series. After these 4 different webinars, you'll be a much more informed and a much more excellent stock picker, because you're actually understanding most of the analysis we do here at MarketsMojo. So if you're not attended the previous current financial trend webinar, I'll see that's on the webinar site. I'll also put it live on YouTube as a playlist. I hope you like the quality event as well. And for valuation, we'll be looking at next week somewhere around the same time. We'll be doing a webinar on valuation. Now, before I end, we have a special launch prize of 2023. You can get free mutual fund transactions. By free mutual fund transaction, I'm saying you're saving on 100 basis point of costs with every mutual fund you transact. 3 months free, which is only for webinar attendees. Remember that this 3 months free is not there on the site, and a 33% discount overall. It includes all our features and the upcoming free mutual fund transactions. 2699 for 2 years plus 3 months, a big steal. Okay, I'll ask Mehtab to drop the link in the chat box below, and then let's open the flow for Q&A. Let me pick some questions on quality.
Okay, Jason. So the first question is from Mr. Dilip. Mirza International is down by 40%. Still, it is a buy with 72 score. Your comments, please.
Okay, so I'll just go on the stock page for Mirza International. Okay, and let's look at the returns of the company. Okay, so one thing I can see over here that in 1 year period, 43% returns, 2 year, 283%, 5 year underperforming. But I think over the longer term periods, it has done well. But I think the main drop has started over here towards the shorter term period over here. In 3 months, it's down by around 34%. Now, the stock is still at around 72. Let's look at the technical trend as well. Yeah, it's still at mildly bullish after this fall. So, in spite of the fall, it's currently still showing as a 72 buy in our particular system. The one thing over here is that the quality of this company is average. So if you're looking at investing, you have to be a bit careful in this company. If you're looking at investing at this lower price, be a bit more careful because it's fallen by around 42% from its high. And also the quality is around yellow. So it's for very aggressive investors to look at investing. But at MarketsMojo, since we have our 4 dots over here, the first dot itself is not green. So be a bit careful when it comes to investing in this stock. It's still a buy at 72 right now. It might be at a very attractive valuation. That's why it's still a buy. But since it's fallen by 42%, you'll need to be a bit more careful before investing. There might be some problem with the company, which the price is actually understanding. Hence, it's taken a beating of 42%.
The next question is from Mr. Shyam Sundar Namdhari. Is it pragmatic to mark quality as good or excellent in spite of few negative quarters? What is the threshold number of negative quarterly results above which quality should not be good?
What is the threshold number of negative quarterly results above which? So, few negative quarterly results won't actually affect the quality of a stock. And it's not just the quarterly results which actually affect. So, there are some of the other ratios which come from the balance sheet as well. Now you need to understand this particular thing is that there's no particular threshold number over here that we look at only one negative quarterly or two negative quarterly results. It's not necessarily that. But a good trend of, let's say, over a year or something can affect the quality of a stock. Now, in a hindsight, you might see and say that, oh, you know what, the last two quarterly results of the company has deteriorated, but why has the quality turned? Now, as I said, quality and the sales and the profit is not the only thing we look at. There are other things like the debt and the capital structure as well. So these things could also affect and actually change the company's quality dot. There's no specific threshold number limit. We look at every quarterly result which comes in. And so there's no specific threshold limit. And it's not just a few negative quarterly results. So when you say few, you need to also speak about a number. If you say 4 quarterly results, it also turns out to a year. And a year is kind of a longer period when it comes to, understanding the quality of a stock. So there's no exact number over here. Yeah.
The next question is from Mr. Saurabh. Hi Jason, great to see you on the other side of camera. I want to use portfolio optimizer click option, but unable to see it on my screen. Is there any other way to use this option?
So I'm not really sure. So it's there for some of the investors who had subscribed way previously when we had the portfolio optimizer under Mojo Professional. Currently, it might not be under the package you've taken, so you might not see this particular button. So no, the optimizer is actually not available inside if it is not part of your package. So I would request Mehtab to just look at your particular email ID later and see if you're actually taking that particular package.
The next question is from Mr. Rathwik. Dear Jason, can there be a rating of quality also from 1 to 100 to assess quality improvement or deterioration?
It's a nice question. It's a nice suggestion. I am not really sure. We'll have to ask the team about this. And a rating of 1 to 100. So we actually don't want to confuse you all a lot. We already have a rating on a stock of from 1 to 100. Adding another score for quality, adding another score for technical might get really confusing. And one thing I've realized when it comes to stock picking is that you should not actually overwhelm yourself with a lot of numbers. You already have one particular rating scale known as the Mojo Score. For quality, we have the 3 different parameters. If I just show my particular screen over here, we have these 3 parameters over here and management, risk, growth, capital structure. Now, if there's any particular parameter which is not doing well, it's marked in red or yellow. But, actually looking at, putting another score over here will confuse you a lot, So I don't think it would get introduced, and it's a good suggestion, but I don't think we actually require it because it will confuse you when it comes to stock picking.
The next question is from Mr. Kedar. Can you please explain the capital structure little at length?
Sure. So I'll just move on to the PPT, and that's the best thing to do for that. So in the PPT itself, there are a few. I've only put a few ratios. There can be a bit more as well. I will not actually put a lot to, overwhelm with the information. But yeah, if you could just share my particular screen. Looking at capital structure once again, debt to equity, debt to EBITDA. Okay, how much proportion of the company's debt, how much proportion of the company's capital consists of debt over here. Now you need to understand in a particular company, it's not bad to have debt. Okay, there can be a few companies which has debt as long as it's able to service that particular debt. I don't know if many of you know understand this finance or accounting concept that debt is relatively cheaper when it comes to getting debt into the company than to issuing new capital and stuff. So debt to equity as to how much of the particular company's capital consists of debt. Okay, and also interest coverage, very important, is that how easily can the company pay back its debt. Okay, so I don't know if you know this particular ratio which has EBITDA on interest payments. We look at how, if the company has debt, okay, so the company has taken debt, that's fine. How easily can it pay back that debt considering its operating profit? And we also look at sales to capital employed and a few other more ratios when it comes to capital structure. Now, if you look at the right part of my presentation, it's a bit more of an easier explanation. There's a particular company, how much debt does it have? Can it service its debt? How much revenue can the company generate with the net assets it has at its disposal? Few more other ratios. I'll do one thing. I'll try to add it in the next particular event. But yeah, this is overall capital structure and how we are actually looking at each company. And remember, it runs for each of the companies. So, if you look at the capital structure of one IT company, we are looking at all the capital structure of all IT companies and its peers, running a lot of combinations and permutations, and then picking the best one. Okay.
The next question is from Mr. Suresh. How many years of backtested data is considered to analyze the quality of a stock?
It depends from parameter to parameter. So growth as especially sales and profit is 5-year trend. And some of the ratios we look at 1 year or the most recent one as well. Now, if you ask me personally, this is as per the investment committee has said it. It's a 5-year trend when it comes to growth and growth, which is sales growth and profit growth. Now, if you ask me personally, 5-year is selected, okay, by the investment team, and I wouldn't personally suggest for you to look at, let's say, 15 or 20-year trend, because there have been many dynamic changes within companies and industries. So, what might look really good for 20 years for a particular company, it might actually change in the next 5 years. So we look at 5 years over here. We also look at 1 year as well. And there are 3 years and 5-yearly period we look at. And so it's more of getting the collection of data from the recent period. We're not looking at something which is very, very recent or very, very long ago. It's a sweet spot we're looking at around 5 years over here.
The next question is from Mr. Sachin. Can we invest in an excellent quality stock even if the financial trends is downward and in negative?
Really nice question over here. Now, this is the one thing I was a bit worried about is that don't look at any particular strategy which is contradicting in nature. So we're talking about something which is an excellent quality stock. And then we're talking about financial trend which is downwards and negative. You know what we'll do? We'll go on the website and see these particular stocks. So I'll just share my screen again. Okay. So what you said is excellent quality stock. I'll clear all filters. I'll just show you how to make it. So you said excellent quality. I'm selecting it over here. And you said financial trend, the latest quarter, let's say, is negative and very negative. Okay, so there are 6 companies like that. Okay, which have negative or very negative trend. Let me open any particular example like Divi's Labs or Deepak Nitrite. Now, this particular company has actually 3 of its dots red. Only one particular dot is green. And it's also sell rated over here. Let's look at Deepak Nitrite again, sell rated. Let's look at other companies, Krishna, Suven, India Energy. Again, okay, this is 58, this is 47, 41. So most of the companies you can see in this list, this particular combination you spoke about of having excellent quality and financial trend negative is actually throwing a sell rating. So going by the data, I would say no. Please look at all the dots over here and the score as well. It's not necessarily you look at one particular, you can try this permutation and combination, but as you can see, the score is sell. So the system itself is saying that is not a good combination. I like the way you're actually looking at, picking stocks. But remember that when a company's quality is excellent, it might see 1 or 2 negative quarters. So let's show you have my screen shared, right? So let's look at Deepak Nitrite, for example. The quality is excellent. Okay, and one of the parameter or the financial trend has become minus 13. Rest all were actually positive for a long period. So it's not actually affected the quality of the stock because one particular poor quarter cannot determine the long-term consistency parameter, which is quality. So it is possible that when the score is minus 13 right now, the quality is still excellent. But if you see that price movement as well for this particular company, let's look at the technical trend. You might see that most of the indicators here are already turned bearish. Even the technical indicator turned mildly bearish from sideways. So it was sideways and now it's turned mildly bearish. So you have to be really, cautious when it comes to investing in such a company.
The next question is from Mr. Aslam. How much weightage is given on the capital structure while calculating the quality of a stock?
I don't know, sir. I'll be very honest. I'll be very upfront. I don't know. These things are a bit sacred. It's only to the IP and the investment committee. They actually take a lot of calls when it comes to, setting the weightage and stuff. I'll be upfront. I really don't know the answer to this. So I don't have an answer.
The next question is from Mr. Biren Bhai Patel. What is the ideal horizon period for good and excellent quality stocks?
Now you need to elaborate further on horizon period. So I don't know what you're actually looking at. I mean, are you talking about buying good and excellent quality stocks? You don't actually have a very long-term approach when it comes to, selecting a long-term when it comes to buying excellent, good and quality stocks and just leaving it. And there's one thing I suggest you not to do. If you see an excellent quality stocks, don't think, yaar, iska excellent quality hai. Long-term mein, it's an excellent quality stock. So let me just invest and leave it for long-term. That's not how you invest. You'll have to elaborate a bit more on ideal horizon period, what you're actually, speaking about. And I'll ask Mehtab to pick this question then.
The next question is from Mr. Satya Narayan. Could you kindly comment on the performance of the company Vikram Thermo and its stock? Recently, it came out with 4:1 bonus.
Okay, let me just check it. It's if you share my screen. So 4:1 bonus splits. I mean, I don't know if Sunil Zamania, our chief investment officer, keeps saying these are simple mathematical formulas. You divide the price by 2 and multiply the quantity by 2. So I don't actually look at bonus and split. Now, if you look at this particular company, one thing I see is that it was sell and it turned to hold, but long ago, 31st May 2022. Since then, it's not moved great. Okay, so there might have been a very narrow price movement. Let's look at it turned bullish from mildly bullish on 26th December. So it's on the up move. Quality over here is average. So there might be a lot of risk when it comes to investing in average quality companies. It has a good capital structure. Growth is poor. Management risk is poor. If you see the growth is 16%, and 16% growth for micro cap companies looks quite small. Micro cap companies actually run much more faster. Valuation is very expensive. So that's one negative thing. Let's look at the financial trend. September result 191316. Wow, this is a very good trend over here. If you can see in my CFT webinar, I clearly said turnaround company. If the company is improving its CFT score back on back, that's a really good. And you can see the price also moving. When it was -11, it was here. And the price has also moved along with this. What I would say is wait for the December results as well. Okay. If you're already holding that particular stock, it's a good time to hold it. Keep it at hold. Because as you can see, it's at very close to buy and it's moving upwards. If you're looking at fresh investment, remember it might be very risky. It's not even at the buy criteria. So wait for the next results to come, and if you're looking at a fresh investment, the score will be calculated, and if it turns into buy, that's when you can look at investing in that particular company.
The next question is from Mr. Prasad. Nice presentation, Jason. Everything about quality has been understood, but my question is, I am unable to understand quartile system. Can you please explain?
Sure, thanks a lot. I'll take you to the website and show you. So quartile is something which is different. It's actually, not part of quality. But since you asked it, I'll explain it to you. If you could just share my screen. Okay, so let's pick a company over here. Let's say Bharat Dynamics. So quartile, as the name suggests, quartile is a bucketing system where we bucket companies into 4 different classes. Okay, so if you can see 1, 2, 3, 4 are the only numbers here. And what we do in return quartile performance is that we bucket companies into 4 different ones. And we check which are the top performing companies which come in the top bucket number 1. The one slightly below that number 2, number 3, and the worst performing ones in number 4. Now what does this do is that, I don't know if you all have heard about mutual funds. We always say that don't pick the mutual fund which has given the best return. Pick the mutual fund which has come in the top 3 or the top 5 year on year. Okay, so return quartile is quite important when it comes to consistency of returns. We bucket these companies into 4 different groups. Okay, let's say across its closest peers, across the industry, and we see where the company has given returns, like how the company has given returns across different periods. So if you see this particular example over here, Bharat Dynamics, let's say industry over here. In the quarter to date period, okay, it's given -29.92% and it's under the 3rd quartile. Okay, what's under the first quartile? Astra Microwave. Second quartile, Bharat Electronics, Hindustan Aeronautics. 3rd quartile is where the company is falling. And the 4th quartile. So you can see we've divided the returns into 4 different buckets. And then we place the company. So across different, so let's say September to December quarter, it's in the 1st quartile. Top performer. Let's say June to September, so on and so forth. So you can look at the quartile performance, which is bucketing, and which bucket does the company fall into across industry, market cap, and across its closest peers. It's a really good thing. If you get a company which is, green over here across different horizons, it gives you an idea of how consistent the company is delivering returns. Okay, so that's how the quartile of a company is actually calculated.
The next question is from Mr. Samarth. Hi Jason, nice presentation. Can you please let me know the quality and future prospect of EKI Energy Services? This is a new age co-involved in carbon credit business.
The quality, okay. So let's go to EKI Energy. If you could share my screen. I'm on this particular stock right now. And one thing I see over here is only one dot, which is management risk, is currently yellow. Rest 2 are actually green. So it's only one particular dot holding the company from becoming a good quality stock. So let's look at the market cap first. It's a small cap company. Okay, it's a small cap company. I always look at the shareholding for small cap companies. See, here is one problem that mutual fund or domestic institutions have not invested in that company. So when that particularly happens, you get an idea that on ground level, if there's no domestic institution like a mutual fund investing, that's one particular reason why the management quality might be yellow over here. Okay, so and that might have actually affected the quality of the company. Currently, it's at sell. It's also changed from hold to sell, so it's a downward trend. If you look at the technicals, you get a better idea. It turned bearish from mildly bearish this year itself. Okay, so the company is losing regularly. If you're already invested in this company, I would suggest you to please exit this company. Look at investing in a different company. And if you're thinking about investing in it, give this company some time. Even though the concept might sound really good, carbon credit, still give it some time before you think about investing in this company. If you're holding it, please sell. Yeah.
Next question is from Mr. Hadik. What are your views on JMC project?
JMC project. Let me just check this particular company. Okay, small cap. Really good pick. If you could just share my screen. Great. So the quality is average, so you need to be a bit careful. And if you scroll below, you can see the growth and the capital structure both are red. Now that's something you have to be very worried about. Okay, because the operating profit growth is it's a single digit 2.22%. So even though the company is growing in the top line, it's able to get more revenue. Because of the poor cost management, the operating profit is only at 2.22%, which is something you need to be worried about. This thing should actually grow. Okay, so that's one thing which actually makes me worried about this company when it looks at the quality. The rest, all the dots are actually, let's look at mildly bullish from bullish. So again, a downtrend, be careful. And also I can see it's a really small company, and look at the financial trend. The December results are not out yet. Okay, so this is quite interesting. The financial trend has been positive for a longer period. Okay, it's also improved its financial trend. Wait for the December results as well. Because see, this is a classic example of where quality comes into picture. Over a long term, this company has not seen a very substantial growth in its operating profit. Now, you might invest in this JMC projects, and I might be proved wrong over here, and the company might do extremely well. But you need to understand that the quality is not good, and it does not have a strong baseline. It does not have a very strong base or foundation to invest your money. If you want to take the risk and compromise, then you can invest in this particular stock. But if you have a choice of picking high quality winners, then please wait for this dot to turn green. And our investment committee might then review it and add it as a Mojo stock as well. You don't know. So be careful. It's an average quality company, and it might be really volatile this particular period as well. Okay, so Mehta, we can pick the last question for today.
So the last question for today is from Mr. Milind. Can you share your views on growth of Vedanta Limited and L&T Finance?
Okay, so I think Vedanta was recommended by us and it's currently exited our system long ago. Okay, and Vedanta, as you know, is a commodity company. So based on the price movement of the particular commodity in the underlying commodity, it can actually affect the price of the stock. Now, one thing which really worries me about, if you see my screen over here, if you could share it, is that the financial trend of Vedanta has seen a significant drop from 26 to 22 to 7 to minus 16. And the price has also followed it. Unless it does a really good turnaround in December, that's one time when you can actually look at investing in this particular company. Okay, the quality is good, valuation is good, technicals look bullish as well. And it's currently 67, so please hold on. It has improved, it has fallen down and has actually improved, but without the December numbers, without getting a proper understanding on, how has the company performed in the past 3 quarters, has it actually pushed its sales up and stuff, it's not actually a good time to actually invest in this company. Okay, and I think you asked me about L&T Finance, right? If you could just share the screen again, Finance Holdings. Well, I think you're referring to this particular large cap company. One thing that really scares me is the quality is below average. Okay, and this company has moved very slowly. Growth, 5% sales and growth, sir. Do you actually want to put your money in such a company which has grown 5% on its top line? It gives you an example, it gives you a proper understanding that this company might be actually in a saturated phase right now. It's not actually growing that much. Instead, why don't you look at investing in other companies from the finance NBFC space, which is actually growing faster because this company looks like it's completely saturated. 5% growth in sales is a very small number, even for a large cap, I would say. Instead, you can just go to full details and compare the quality with other companies in this. So let's look at, we have two excellent quality companies, Bajaj Finance, SBI Cards. We have other good quality companies as well where you can look at putting your money. Because being a large cap and only growing by 5% is a very small number. Looking at the trend of the stock, the price trend, the score changed from buy to hold, which is a negative. And looking at the technicals of the stock, it turned bullish from mildly bullish very recently. So there's a small price uptick. Still, so wait for the results if it comes to investing. If the company actually does a really good performance this time. And if you look at the financial trend, you can see it over here. Since October 19, it was minus 12 till September 2022, it did not see any major growth. And that's how the prices also followed. So wait for the results. If the company consistently performs well financially over the next 1-2 quarters, that's when you can actually look at investing in this particular company. Okay, so I think we're done with the Q&A session today. And I really enjoyed the event. I hope I could explain to you what quality exactly means. How do we use it? How you can actually look at whether the company's quality is improving and how you can actually invest in companies, keeping in mind the quality of a stock. And as I said, this was the second episode of the series. Going forward, I'll be talking about valuation next week. And then we'll be also talking about technical trend. And tomorrow we have a webinar at around 7 p.m. We have our CEO and founder, Dr. Mohit Batra, and our Chief Investment Officer joining us. It would be a rapid fire power series Q&A event. And I'll be moderating it. I'm hoping to seeing all of you all come for that particular event as well. Goodbye and have a great evening. Thank you so much.